Is the stock market about to burst? Is the stock market in a bubble? Let's go and have a look at the charts, and I'm going to show you what's going on. But before we go to the charts, it's Coffee with Rob. For those of you who don't know me, for those of you who have never watched my videos before, I'm Rob. And for those of you who do know me, I'm still Rob. It's Coffee with Rob, and we're going to do market analysis now. I've introduced Trade of the Week, and we're having a look at the trades for the week and how we're doing on the week. What's happening this week? What's happening next week? What's happening every week? Let's go through the charts and let's go and see if the US market's going to crash, if the European markets are going to crash. Let's go and see if they're going to go up. Let's go and see what the Forex markets are doing, the commodity markets, and even the crypto markets. Can you believe we even look at the crypto markets? We look at everything during the Coffee with Rob. I was just trying to get this to fit in here somewhere so that you guys can see the charts, man. You guys want to see these charts. You don't want to miss them completely. Oh, while we're here, guys, don't forget, trading is risky. Very risky. And if you're unsure about trading and you don't like risk, you probably shouldn't be trading. I just thought I'd throw that in there just in case you didn't know that. But I'm sure most of you already do know that. And you know, the guys who trade on the 5-minute time frames, 99% of them actually lose money. Can you believe that? That's insane. Let's try and get all this lined up. Let me just see where we are. I don't want my mug to be too much in the way, but I do want you to be able to sort of see me as well. So I'll put it a little bit further down. You know, there we go. If that's okay. I think that'll work just fine. Now we can go and have a look at the charts and we can go and see what kind of trades we're going to take next week, what happened last week, history. Oh yeah, a bit higher so you can see the history as well, eh? Okay, there we go. That's a little bit better. Let's get started. Let's go and have a look at what's going down. Now last week, the history last month, I'm going to put the statement out in the live show. We have the live shows on Tuesday and Thursday. On Tuesday, I want to put the statement out as to how the month went. But basically, the month went as it made a small profit. It did okay. The account's picking up. And these are your trades, guys. As you know, we pick these trades together on the live shows. They're not bad. Hasn't done too badly. And of course, yesterday we were in the gold and the gold short. And that was on a daily, of course. That was on the 4-hour. On the 4-hour chart, because as you know, we normally trade on the 4-hour chart. And what I actually did here on the 4-hour chart is I actually put a trailing stop on it because it was a Friday afternoon. You guys know I don't like to hold trades over the weekend, no matter what they are. So if I can get out of them, I will. So my gamble was put the trailing stop on. And if it takes the trailing stop out, so be it. We make a profit. And if it doesn't, then we're sitting on it for the weekend, which we didn't really want to do. That's fine. It took the trailing stop out. We made $124. If I'd been scalping, I would have made that anyway. So I'm quite happy with that. That's a profit. It's in the bag and we can continue on. So we have no positions in the market over the weekend. So no matter what Trump says to Zelensky, it isn't a problem. We'll wake up on Monday morning either way and we'll just choose our trades. Gold is kind of still, I've put it down as a buy. I've put it down as a buy on the markets based on the fact that it hasn't got through the trend support on the weekly. Now you've got to keep in mind that weekly trades are slightly different to 4-hour trades and daily trades. Our position trading on the daily is very reliable and very good, but you're going to get a different picture on the daily and you're going to get a different picture on the 4-hour to what you get on the weekly. And the weekly is a whole week's information in one candle. Agreeably, we have a big red candle and it's buried the last candle. So we would say that's pretty bearish, and I expect it will be pretty bearish next week. It'll probably come down to this 28 level. When I say it's still a buy, I mean it's still a buy above this trend support. I don't mean that it's actually a buy, because if I look at this, there's another week of downside before we get the buy. That said, you've got to decide what you want to do. Do I want to sell this from 28.50 down to 28? Is that enough risk to reward for me on a weekly basis? Or do I want to wait for it to get down to the trend support and maybe buy it in from that area down there, which is probably the more likely scenario. We call it as a buy on the weekly, but we also understand that there's a possibility of another downside week, especially with that big red candle there. Don't expect everything to go your way. US 500. Now, if I look at the US 500 on a weekly, and these candles are much bigger because we got weekly information here and effectively from the last 6 months to a year. So the candles look a lot bigger. My opinion on the US 500 is also still lying in a buy territory. It It had a red week. It's had 2 red weeks, in fact. But this red week broke through the support all the way down to these levels down here. But at the end of the week, we've got this long tail of buyers coming back into the market. Now, this long tail of buyers coming back into the market say to me, Rob, you're not going short on this for the week just yet. Let's have a look and see how this goes. This is not a trade I would actually take, because I'm looking at this and seeing all the buyers come back into the market. I'm thinking there's a good possibility that we're going to go back into a buy on this based on this level here. So if it had finished and closed with a shaven bottom here, like solid red candle down here, I would have said that's short. That's gone next week. There's no recovery. But with all these buyers getting back in and leaving that tail on there, little bit of 50-50 here. Good chance it could go back long again. Also a good chance it could continue on short. What you can do with this, you can go back to the day and just have a wee look at what the day says. And the day is telling you it's starting to go green again. Coffee with Rob. We need some coffee. The day is telling you it's starting to go green again, and it's starting to go the other way. So you've got to watch out for this scenario. What it's showing you there is that long tail on the week. So on the day, it started to pick up green again. That said, bit of an inside candle. Got to watch out. It could spike either way. So on the markets crashing, are they going to crash? Are they going to fall off the bus? Is it the end for the markets? Not yet. Not yet. Might be soon, but not yet. By the way, guys, don't forget, after the charts, I am going to go through the strategy with you guys. We are going to talk a little bit about strategy and how you can make money in the markets. Right now, we're just going through the markets and seeing if we think they're going to fall off the bus. And the way I'm looking at it at the moment, I don't think they're going to fall off the bus just yet, guys. Not just yet. Give it a little bit of time. Give it another week before you make that decision. Look at this. This is the Dow. Now, the Dow Jones, as you know, Wall Street is very much linked to the US 500, S&P 500, just like the NASDAQ, the Tech 100 is. Now, we understand that the Tech 100 probably affected the S&P 500 quite a lot with NVIDIA and all that, and having bad results and that sort of thing. So that would have dragged that market down. But if I look at the Dow, on the weekly, we've got a green candle. We've got a green candle on the Dow. That's pointing to the upside. That's telling me the Dow is still bullish. There's still a buy in the Dow. There's your trend support all the way down here, and it's still above the trend support, so she's still trending to the upside. And if you want to confirm that, go back to the day. Big green candle on the day. That said, a whole bunch of sellers came into that one, gave you a hammer which looked like it was going to go down, but you got this big green candle pointing to the upside now. That tells me we've got a strong move going to the upside. So the US 30, US 40, Wall Street, Dow Jones, whatever you want to call it, is kind of bullish at the moment. If you go and look at the US 100, the US 100 is pointing down. So that's what's dragged the S&P 500 down, is these big red candles. You see these big red candles going down? Those have dragged the S&P 500 down. They've dragged them down because it's the tech stocks that have caused the problem in the market. They've had a bit of a blip. Be careful of this, though, because you're looking at this and saying, it's the end of the world. The markets are all going to crash. You know, everything's going to go down and everything's going to go pear-shaped. I'm going to lose all. No. Just relax. This looks like a bit of a flag pattern to me. And if I take this down to the day, you'll see that it's been in a bit of a range here. And if I was to go further back on it and pull it all the way back, there would be a move up there, a bit of a flag pointing to this, to the fact that it's probably going to continue on and resolve to the upside. Don't panic just yet. Let's just make it a little bit bigger again so you can see those candles. Big red candles don't mean that it's the end of the world. It has been trending to the upside. It hasn't broken structure that badly. There's a bit of a break in structure here. Do be careful of that, but it seems to be ranging at the moment. And I think it'll probably find its feet once again. If you're invested in the market, you're invested in stocks like NVIDIA and those types of things, don't sell them. Investments are for 30 years, guys. It's time in the market. Don't forget that. Brent crude oil. On the weekly, we're calling it as a sell, but do be careful, because when I look at a sell on Brent and I see it coming down to this major support level, your risk to reward isn't very good for a buy at the moment. But if you were in a buy further up in these areas here, fantastic buy. You can see all the sellers getting back into the market. She's come down, bit of an indecisive candle here at the end. I was expecting it to get all the way down to the 70 level, which it seems to be doing. This could continue on down to 70, but it is hitting into the support level right now. I would be cautious taking any shorts now. I'd actually wait for it to get down to these levels and then maybe look at getting into a little bit of a buy at that level to send it back up in the upward trajectory, upward direction. Guys, our main trade of the week, is the Euro US dollar. Why have I chosen the Euro US dollar? What makes me choose the Euro US dollar? Well, look at this big bearish move down, red, all the way down. It's hit a point where it's turned around, and what I'm seeing here is it's broken structure. It broke that structure over here. Look, we can draw it in just quickly here. I'm going to draw in on the candles just as an indication. And it's broken through that structure. Hopefully you can see it. Let me make it a bit brighter for you guys so you can see it. It's broken through that structure, and it's going a little bit sideways, but going through it and going up. It's also going off its support level at the bottom here. There is a support level down here, which it's moving away from. Now it's come back with this candle for the week, and it's hit that. Let me make that a bit brighter for you guys as well. It's hit that trend support. It's hit that trend support. It hasn't gone through it, and it's pointing to the upside. We take this down to the day, and it looks pretty clear as well that it's broken through here. It's giving a little bit of a move, and it's going to probably resolve to the upside. So don't be calling that short just yet. On the weekly, this still looks like a really good buy. On the trade of the week, I've got the trades of the week here on the side. I've called this for a buy, and I'm saying that looks good. Leave it with that. It's a long-term buy, so I'm looking at buying in 1037. I'm looking at stop loss at all the way up here at 106, 106.5, and I'm looking at take profit all the way down here at 1018 because it's a weekly trade. So if you're trading weekly, that's what you're looking at. You're looking at wider gaps. So I'm just doing this trade of the week for you guys so you can get some more concept into the reliability of information, so that when you're trading your 4-hour charts, when you're trading your 1-hour charts, when you're trading your daily charts, you're looking at this and saying, I know the US dollar was kind of bullish and it's looking kind of bearish here. Should I, shouldn't I? You know, you can look at your trades a little bit closer with that kind of information in place. Great British Pound US dollar should be the same as the Euros US dollar, pretty much a buy. And then we were looking at the Euro Great British Pound, which is definitely a sell, big sell to the downside. That is still a sell. Big one we were looking at there, Bitcoin, nice big sell. Remember I said I wanted it to come down to 70,000 so that we could get a nice buy into Bitcoin for a bit of profit in the short term. And here she goes, coming down. It's broken through this. I'm just going to make this a little bit clearer so you guys can see it again. It's broken through that trend support, broken through it nicely in those areas where it's been ranging. It broke down, broke to the downside, broke through the main support, and is heading on to the downside. Look, there's money lying here between the 65,000, the 70,000. Loads of money lying at the 65 to 70,000. Not below that because that's already been taken out. There's the money. Lying right there between 65 70,000. Gets down to that level. There should be some money there to be taken to push this all the way back up to the upside. Keep in mind, guys, the Bitcoins and the Euro, Ethereums and all those things are all open on the weekend, so you can actually trade these on the weekend. So this is actually open at the moment. If you wanted to take an order right now, you could, because it's BTC. I'm waiting for this to get down to these levels, and then I'll look at a buy. I won't take a sell. I'm not interested in taking a sell in it, but I would be interested in taking a buy down at these levels. It's a good possibility that we'll get back up to 100, 1,000 again, and that's going to make you quite a bit of money. New Zealand dollar, US dollar, which we got out of the long earlier in the week on a trailing stop, which was great. Thank heavens for that, because it carried on going, and it has now broken to the upside again, but it's breaking down. And on the weekly, I'm still calling a buy on this, because on the weekly it's still a buy. Even though there's a big red candle, it's still a buy on the weekly. Keep that in mind. But with that kept in mind, just remember, like I said earlier on, there could be another week of selling in this before you get the buy again. So I'm looking for another buy entry into the New Zealand US dollar. But the way you look at this and you say, well, it is still bullish on the weekly chart, but there's still maybe another week of weakness in here. Keep that in mind. Keep that in mind. Don't call it as a sell. Call it as a buy when it's ready. In other words, if it gives you a bit more downside, you go down to your 4-hour charts down there. You say, I'm on the 4-hour chart now. I'm looking at this. I'm looking for my buy. Perhaps I'll get my buy down here. Now you know what to do. You see, so that's you get your entry on your 4-hour, your 1-hour, whichever time frame you really want to trade on. You get a better entry on it, and you know where you stand. The weekly charts just give you a lot more information on the market. Aussie dollar, US dollar is the same as the New Zealand dollar, US dollar, and you see the big red candle and that sort of change in direction candle up there. It's kind of telling you it's a sell, but I'm still calling it as a buy because it's above structure, and it still hasn't broken to the downside. It hasn't broken the structure to the upside, but it may do so this week, and it may give you another big red candle down to here to test this, what is now trend support and was trend resistance, but it's going to break this short-term trend support if it does that. But if it does do that, we can have another look next week, see where we stand. But what we know is if we were to take a long now, it's too early. We're waiting to see what next week's candle does before we decide which way this market's going. Really easy. not complicated, not difficult. So the world's not blowing up just yet. It seems to be holding on. The market seems to be holding on. If I look at the technical charts, they haven't crashed yet. They're not going to crash anytime soon. If this breaks to the downside next week, new story, because then we could be looking at some all-time lows, some really interesting information. I mean, this could come all the way down to 53, 5200. Imagine that on the S&P 500. This is the daily chart, by the way. Guys, let's talk about the strategy. So I'm just going to move my picture out a little bit so you can see me a little bit better. Hey, make it work, man. Make it work. Let me just make this work for you guys so you guys can see me. You can see me nicely. Yes, I'm in the picture. There we are. What's the strategy to making money, guys? I always tell you what the strategy is to making money because the market is 50-50. I always tell you guys the market's 50-50. Why do I tell you the market's 50-50? Because the market's made up of traders. It's not made up of algorithms and maths and bots and fractal information. Everybody thinks the market's objective when the market is insanely subjective. It's actually a subjective thing, the market. At the end of the day, that's because there are buyers and sellers in the market. And if you don't have buyers and you don't have sellers in the market, you don't have a market, do you? Do you actually have a market if you don't have buyers and sellers? Probably not. That's a nice coffee. Probably not. And this is where I try and get this over as often as possible. So many people try to disagree with me on this and tell me that the market's made up of maths. But guys, what did we do before we had computers? How did we put the markets together? We had little slips of paper and we bought and sold off each other. When you go to the shop, it's not an objective algorithm thing. People buy what they feel they need to buy. Some manager works out what people might want and what kind of price people might want to pay. But that's about it. And it's a bit of negotiating, it's a bit of banter between buyers and sellers, and that's what the market and the stock market is made up of. The market's 50-50, always will be, and you can't change that. And don't forget, guys, the squiggly lines that I just showed you there, those are just a high probability trade. You went on a course and you learned all about high probability trading. You learned all about the course. You learned all about the system. But that's not going to win you the money in the market, because a win rate doesn't make you money in the market. All a win rate does is give you something to boast about. It depends how much you win on every trade, doesn't it? And how much you lose on every trade, doesn't it? If you don't have a strategy and you don't have a business plan, you're not going to make money in the stock market. It's just one of those things, guys. That's how it works. So here's the strategy, and it's quite simple, quite straightforward, and I repeat it over and over in my videos. So if you don't want to watch it, you might want to skip over it to the ending where you get your free gift, whatever the case. What we do is we look at the size of our account, whatever the size of that account is, and I'm just going to use 100,000 as a round figure. We could use the $25,000 funded account that we got there. The funded trader account I opened so that we can play on the live shows together, and you guys can take trades and I can take trades, and I don't lose $10,000 or $100,000 in an account because we took the wrong trades. I only lose the $100 that I paid for the account. If you guys want one, you can grab one in the description. That's why we've got that account. But I'm just going to use 100,000 as a round figure, like a cash account, whatever the case, so that we can work on those figures. It's much easier to work with them. Then what I do on my side is I risk 1% per trade, knowing that I can take 10 trades and only lose 10% in my account. 1% per trade on a $100,000 account is $1,000. $1,000, not difficult to work out. You see, if I'd used complicated numbers, it would have been more difficult to work out. So I'm making it easy on me, making it easy on you. I'm making it easy on the universe at the end of the day. Now we know that it's $1,000 that we're risking. But how do you work that out? Because every single trade is different, isn't it? Every single trade's got its own little ups and downs. How do I work this $1,000 out? Really easy, guys. What you got to do, look at the trade you want to take, whichever trade it is. Maybe it's the Euro US dollar long. Maybe it's a weekly trade. Maybe it's a 4-hour trade. Maybe it's a 5-minute trade. I don't know. Remember, 5-minute traders, 99% lose money. Now you work out, okay, I want to take that trade. Where's the stop loss going to be? And that's the first thing you got to think about before you even look at the trade. Where's my stop loss going to be? That's the most important part of your trade. Do you know that? That's the most important of your trade. To manage your risk is the most important part of your trade. If you've managed your risk, you're halfway there. Now you look and you say, well, I'd put my stop loss down there at this invalidation period. Choose an area where you know the trade's invalid. Don't just take, I'll put my stop loss there because it's that tight stop, aggressive, defensive, all that stuff. No. What you do is you look at that trade and say, you know what? If the price gets to that little point down there, then my trade's invalid. I wouldn't take that trade. Now you know where your stop loss is. Now you know the point at which that trade is dead. Then you work out how much $1,000 is in lots or pips or points or whatever it is you're trading with, back up to the cost. How many lots can I buy? Back up to the cost. Now you've got the size of your trade. It's maybe not 0.2 lots, 5 pips or whatever it is, okay? Now you know it's $1,000 back to that stop loss, and that's my cost. Now I want to know, what's my risk to reward? Is this going to work for me? Is this trade actually going to work for me? Is this going to make me money? Because I can't be making $50 risking $1,000, because that's insane. It doesn't make sense, does it? I want to at least be making $1,500 or $2,000 or maybe more for risking $1,000. So I'm risking $1,000. I want to make more money. Now I look up and I see, where can I take profit? Now, you can't just say, I want a 2-to-1 profit and just plonk a 2-to-1 profit on the chart and hope for the best, because that's not going to work either. What you got to do is look at it as, if I was to look for a 2-to-1 risk, if I want to make $2,000 on this trade now, is it viable? Can the price reach there? And can it reach there in a reasonable time? Will the price be able to reach this? Because if not, it's not a good risk to reward, and it's not worth your while trading it. You've got to look for trades that are worth your while trading it. You would have seen me in the live shows look at a couple of trades and say, guys, this trade's not worth our while because the risk to reward just isn't there. Then I leave the trade. I'm not going to trade it if it's not going to make me money. It's wasting my time. I'm not going to dream up a 2-to-1 with a hope that I'm going to make that. I've got to put it in there and say, well, this looks good. If I take $1,000 risk on this for those points, then I look for 2,000 coming back. There's definitely, it's going to reach that quite easily, because I can look at the chart and it's a high probability trade, because what's happened in the past will in all likelihood happen again in the future, because human beings are creatures of habit. It's not about the chart. It's about all the human beings that are buying and selling in the market. And human beings are creature of habit, and they're doing it over and over again. So they're going to do the same thing again, and hopefully they're going to make you some money by doing that. So now you've got your trade, you've put it in place. The big problem with these trades is how to manage them, because now you've taken the trade, boom, place order, you got a trade, it's on. Now what? Let's say it goes into loss and it starts going down. And it happens. If you're in a lot of pain, then you've traded too much. You've got to watch how much you're trading so you can sleep at night. But let's say it's going down and you're looking at it and think, I'm in a loss, I'm not happy with that. I need to get out of this trade. Do not dollar cost average. For heaven's sakes, do not dollar cost average, because so many people do that. But you won't do it when you're in a profit, but you'll do it when you're in a loss for some odd reason. Just let the trade run. Let it run. Often it'll just go back into profit. But if it doesn't and it goes down to your stop loss, do not move the stop loss further down or away. You know, when it gets to your stop loss, do you remember what we called it at the beginning? We called it an invalidation area. And do you know why we called it an invalidation area? Because it's invalid. Why would you move it if it's invalid already? If it's invalid, let it take your stop. Learn to lose. Learn to lose. Learn to take your losses. Out of 10 trades, you're going to win 5. You're going to lose 5. That's the way it goes. The trick is to make more on your wins and lose less on your losses. Win rates don't make your money. Making more on your wins makes you the money. Now the trade goes into profit and you're thinking, dollars here, let me get out of that one. No, that's another mistake that we make. We see a little bit of green, we see a little bit of profit, and particularly when we've been seeing a lot of red and you see a tiny bit of green, you get really excited and you want to get out of the profit because you've got a little bit of green. Let's take that while the going's good, eh? That's the psychology behind it, and that's the psychology you have to get out of your brain. You have to get rid of it. We are caught up by fear of missing out, fear itself, and the psychology of being able to stay in a trade. Patience, sitting on your hands. It's going to cost you so much money. When it goes $300, $400 into profit, leave it. Sit on your hands, let it go. When it goes up to $500, $600, then move the stop loss up behind it into break even. And then what I sometimes recommend, put a trailing stop on it if you want to. Manage it manually, whatever the case. But as it goes up, move the stop loss up behind it. And when it gets to your target of, say, let's say it's $2,000, take the stop loss and put it right up behind it. And when it comes back and takes it out, you won't be unhappy. What I often do, and you will have seen on the Friday afternoons, is I'll put the trailing stop right up behind it, no matter where it is in the position. If it's nowhere near the profit take or it's close to the profit take but it's in profit, then I'll put the stop loss right up behind it. If it takes it out, then I'm not sitting in the trade for the weekend, because I don't like to sit in trades over the weekend. So that's what I use it for. Don't rely on these take profits and stop losses automated, because sometimes they don't take them because there's not enough liquidity. One of the guys had a problem with that last week. You've got to try and look after these trades manually sometimes. The reason we trade on the 4-hour position trade or even the weekly trades is so that we can go off and do our own thing and leave the trades to do their own thing as well. Guys, if you want a free Forex book, drop down to the link in the description. I've got a free Forex book for you there as well. And there's lots of other little links there that support the channel and keep us going and keep us bringing you videos, man. I hope you enjoy the videos. I hope these videos are helping you. Most of the comments that I see generally are helping you guys, and they're definitely working. So that's great. I'm really happy that you guys are are getting some success out of these videos. Don't forget, you're going to come back for tomorrow's live show at 11 GMT plus 2, and we're going to go and have a wee chat about the markets again and get on with things. But if you want to know more about my systems and more about my strategy, watch these last videos here. They will give you all the information you actually need. Thanks for watching, guys. Until the next video, cheers, ciao, and bye. Have a fantastic, wonderful trading week, if not trading month. Ciao, ciao.